Worldwide accounting diversity.
Historically, considerable differences have existed across countries in the preparation and presentation of financial statements. These differences can result in significantly different amounts being reported in the financial statements prepared by companies using different GAAP. A variety of economic and institutional factors are thought to have influenced the development of a country's accounting system and caused differences in those systems across countries. Such as A. Legal system. In code law countries, accounting rules tend to be legislated. Common law countries tend to have a non-legislative organization that develops accounting standards. B. Taxation. Financial statements serve as the basis for taxation in many countries. In those countries with a close linkage between accounting and taxation, accounting practice tends to be more conservative so as to reduce the amount of income subject to taxation. C. Providers of financing. In those countries in which family members, banks, and the government are the major providers of business finance, there tends to be less demand for public accountability and information disclosure. In countries where shareholders are a major provider of financing, the demand for information made available outside the company becomes greater. D. Inflation. Countries with chronic high inflation adopted accounting principles in which traditional historical cost accounting was abandoned in favor of inflation-adjusted figures. This was especially true in Latin America. However, inflation has been successfully brought under control in most countries, and this factor is no longer as important in explaining accounting diversity as it once was. E. Political and economic ties. Through previous colonization, a British style of accounting is used throughout most of the former British Empire. Ties between countries also help to explain similarities between financial reporting in the US, Canada, and Mexico. Differences in accounting across countries can create several problems, such as A. Consolidating foreign subsidiaries requires that the financial statements prepared in accordance with foreign accounting rules must be converted into parent company GAAP. B. Companies interested in obtaining capital in foreign countries may be required to provide financial statements prepared in accordance with accounting rules in that country, which could differ from rules in the home country. C. Investors interested in investing in foreign companies may have a difficult time in making comparisons across potential investments because of differences in financial reporting across countries. D. Historically, there has existed a lack of quality accounting standards in some parts of the world. The 1997 East Asian financial crisis was at least partially attributable to a lack of high-quality accounting in the region. Differences in accounting across countries exist in several areas. A. Differences in the financial statements included in an annual report. For example, some companies in Austria and Germany provide a statement of changes in non-current assets in their set of financial statements. B. Differences in the format used to present financial statements. For example, assets are presented in order of liquidity by most companies in the US, Canada, Japan, and Mexico, but in reverse order of liquidity by companies in most other countries. See differences in the level of detail provided in the financial statements. For example, many foreign companies provide a separate column in individual financial statements indicating related notes, whereas this practice is virtually unknown in the US. D. Terminology differences. For example, Bermuda Incorporated Jardine Matheson refers to accounts receivable as debtors, and inventories are called stocks and works in progress. E. Disclosure differences. For example, companies in some countries provide extensive disclosures related to their employees. F. Recognition and measurement differences. For example, several different models exist internationally to measure property, plant, and equipment subsequent to acquisition. Historical cost, HC. Historical cost adjusted for changes in the general purchasing power of the national currency, GPP, and fair value, FV. This concludes an overview of the differences in accounting procedures across the world.